Okay, cool. So yeah, let's go right over our daily bias and stuff like that. So first thing I'm gonna do is I'm going to talk about, I guess, some of our what are these called? Session profiles. That's what they're called. Session profiles. Let's go over some of our session profiles, right? So um we'll go over bullish and we'll go over bearish here. So you guys should what we want to see basically is, let's say this is AM and this is gonna be PM, right? And in the middle here is lunch, right? AM, PM, lunch. Okay. So this will just we'll just go over this real quick as like a very general idea for what you guys want to see for the day. In terms of session profiles, and then we'll kind of go into daily bias as in where to look, right? So we have a classic one right here. This one is called two session up close, I think, something like that. So it's going to start off with kind of London doing something like this. We're going to have a manipulation Judah swing down here at 9:30 before starting our run up. We're going to get a little retracement down to lunch, and then we're going to consolidate here around lunchtime. And through lunch, we're going to consolidate and we'd have PM session just run through and something like this. And it'll be reverse for bearish here. And then this is just one of them. And then we'll have the PM reversal one, which is very similar here, where you're going to have that 9:30 manipulation down and same vice versa again. You could have that lunch consolidation here. You could have PM run the high, do a smart money reversal, run down to the low right here. And then one of two options here is kind of going to go either come back up here or continue back down and stay within this kind of range here, right? So that's one, two, and then I think there's one more, which is going to be kind of like more of like a consolidated day or kind of like a range day, basically, where you're kind of going to see something like this happen. Lunch again, consolidation, right? PM comes up, comes down, takes out this original low, and closes back in the range, right? So these are kind of the profiles we want to see, the session profiles we want to see. This is a more of a consolidation day, but let's go into how we want to look for our daily bias. So the way we look for our daily bias is very similar to how we kind of look at charts in general here. And you want to kind of just look at charts, kind of like imagine this was like a 5 or 15-minute time frame here, right? Since time is fractal, we kind of want to look at all the same things. So we want to look for, so is institutional order flow, or is order flow right now bullish or bearish, right? So do we want to be bullish or do we want to be bearish? And certain other things like, oh, if we come take out this liquidity, where can we expect price to do a retrace down into and stuff like that. So let's go straight into it and we'll kind of examine this right here. So we know that we are in bullish, we're bullish right here. For example, here, right, after taking out this liquidity here, right, which is the contract liquidity, the contract low, right, we can expect a run back up into at least internal range liquidity here, right? So this gives you your daily bias for at least once we take down this low here, we can kind of look up and come into the SIBI here. Once we come into the SIBI here, our drawn liquidity should instantly be bearish. Now, once we kind of start to see us start to break through this SIBI here, there's nothing left that can really hold us here, right? So again, think of this as this was like a 5, 15, or even 1 minute chart here, right? After we come up, what do we come up here and take? We come up in here and we take a minor buy side, right? So what can we expect after minor buy side to be taken, especially if we're holding this SIBI here, right? We can expect lower prices, right? So now we can use this to expect lower prices once we come into the SIBI, which is actually, this is your unfilled range of your SIBI, right? We can expect lower prices here. Boom. And that's what we get down into. ES came into this BISI here. You can use your implied fair value gap here. Doesn't really matter. You can also use your inversion here. Again, doesn't really matter, right? Use your inversion and set. You can have your set offset on. Doesn't matter, right? And let's just read out order flow here, right? What is this minor buy side also telling us? That we've shifted market structure, right? So we came up here, we shifted market structure here, right? We returned back down into a discount, right? We turn back down into a discount here, right? So we can reasonably expect that from here, we can expect a rally back up for at least this high here and the relative equals we've made up here. Again, a lot of your daily bias is based off what what this chart is telling you and what you expect to see on the day. Again, just like if this was a 5-minute chart and you guys were looking to take a trade, right? These are relative equal highs, clean, so we can expect a run up here, right? especially once we inverse this here, right? We've inversed this here. We have this high, quadruple equal highs here, right? We can look for slight pullback into this BISI. Once we're in this BISI, we can look for higher prices. Boom, higher prices, take out this liquidity. Once we took out this liquidity, right, again, into this daily SIBI here, what can we reasonably expect? We can reasonably expect, since we took out our external range liquidity, come right back down into internal range liquidity, right? This is your external range liquidity up here. These two highs, we can expect to run back down into a internal range liquidity, which can be an order block or fair value gap. In this case here, we're going to have to use our implied fair value gap, which is just right here, right? We get inside this implied fair value gap here, holding it. What do we also have here? We have our breaker block, order block right here. We're holding that into. Order block is also internal range liquidity, right? So we can reasonably expect that since we're holding this order block here, we can continue to expect higher prices, right? What do we have here? We take out another minor buy side liquidity here, still holding the SIBI here, right? So after we take out this buy side liquidity, we can expect what? Another run into we can expect another run into internal range liquidity. So what did we come down? Come down into this order block here, right? We're in this order block, we start to rally. We should be looking at this high here, right? Price comes down one more time, rejecting, what are we rejecting? The mean threshold of this change in state, right? Mean threshold, look at that. All right, rejecting that mean threshold right there. What did we do? Come back down one more time into this order block before rallying, taking out this high again, and one more time right here. Right, so what can we reasonably expect after taking out this liquidity here? We can expect to run back down into internal range liquidity. Again, this order block, you can have this rejection block here marked out if you wanted to, right? A couple things. We see us, right? We see the SIBI here. We see us invert the SIBI here, right? We can reasonably expect higher prices after inverting the SIBI here. Once we see that, once we see that, again, we can look up to take this high right here. And after we take out this high here, right, again, what's reasonable, we can expect price to come back down into a discount, which we did, right? What did we come back down to? Internal range liquidity and discount here. And we're now starting to push our way back up, right? Look at the SIBI here. We've inversed the SIBI now, right? So what can we reasonably expect, especially after making a propulsion block here, right? Order block right here, right? Still holding this bullish order flow, propulsion block right here. We can reasonably expect price to continue upwards here, especially because ES is out here making new all-time highs, and we can see that now we have this SMT here. So it can be reasonable to expect us to see lower prices, but nothing in price here is telling us that we want to see lower yet. Does that make sense so far in terms of understanding where the daily draw is? Same goes for the weekly and everything like that. Cool. Now for our next part of daily bias is you want to use this in conjunction with coming down into a lower time frame. So let's come into an hourly chart, for example. And let's just choose like a day, right? We could choose we can choose like trying to find like a good day here. Let's just choose something here, right? This was really pretty bad price action, but what happened here, right? We can kind of start to read this order flow here. Let's say we had this Friday here, right? Tuesday comes in, makes the low of the week here, and we take out Friday's low, right? Let's say Monday, you kind of didn't really know what's going on. Monday just decided to consolidate. That's fine. Come Tuesday, right? Monday kind of just comes into this BISI here. Come Tuesday, right? Let's look at what Tuesday opens up in the AM session from the hourly, right? What did we see here? Price by AM session has inverted this SIBI here, and we took down this 1 hour low, right? Same thing again applies here, right? We want to see that external range liquidity. Let's see a return back into internal range liquidity, and we have this really small SIBI there. So it kind of gives you your bias here. This was our only liquidity to take, and we had this right here, which would be kind of a hard run to do. Right, so now let's look for where areas are smooth, where areas are easy to kind of get. Where are we going to get in the lowest resistance here? What's the lowest resistance run up? Is it going to be easier for us to come up and take out this liquidity here when we only have one imbalance here? Well, is it going to be harder for us, especially when we're in discount and bullish order flow here, to come and take out all of this stuff here, where we have inefficiencies here, order blocks here, and balanced price range from here to here. All right, this is a balanced price range here, right? What did we do? Came into the balanced price range and ended up coming up here, right? So that's how we kind of want to look at our daily bias, right? Make sure that on our daily time frame, we kind of understand what's going on here, right? We know that we didn't just take out a high, right? Because let's say here we took out all-time highs here. We can reasonably expect a retracement down, so we can have a bearish daily bias for a little bit, right? Now that we've taken that out, came into discount here, right? We can reasonably expect price to continue higher. Let's say we're looking more intraday here, right? We can look at a little bit of a mechanical model, and let's look at a mechanical model real quick. The mechanical model states that you want to look at the previous day's high here, right? Did we close above the previous day high? Yes, we did. So I'll draw on liquidity for the next day should be this daily high here. We got that daily high. Did we close above this daily high here? No, we didn't close above this daily high here. So our next draw should be this daily low. Boom, that daily low is taken. Did we close below this daily low? Yes. So this should be our draw for the next day. Did we get that? No. So this is still our draw on liquidity here. And we still didn't get that here. And inside the SIBI, and we didn't get that here, but that's fine, right? So now that we ended up closing above this candle here, right? And this candle here as well, we can expect the drawn liquidity for the next day to be this candle high right here, which is what we get here, right? Since we closed above it again, we can expect our drawn liquidity to be this high again here, which we got. Since we failed to close above this high, we're going to look for this low for the next day. Boom, candle gets it low on the next day. We failed to close lower here, and we failed to close higher. Now it's here we have to determine, okay, well, which one is it going to be? Since we failed to close higher here, and then this was all drawn, we failed to close lower here, ideally the draw would be up here. Let's also note that we failed to close above this all-time high here. So with this kind of context, we can kind of expect price more likely to come back down, but inside of this daily BISI, it wouldn't be impossible to expect price to come back up and to take out that high, right? But we see that we failed to displace at the low here again, so we can look at this high to be our next draw. We got that high now, right? And now, since we failed to close above here, we can expect this low to be our next draw here. Boom. Did we close below this low? Yes. So what's our next draw on liquidity? This one right here, and so on. Do we have any questions about this? This like mechanical model here. Close below this low. We have this low. Take. Fail to close below this low. So this high should be the draw on liquidity, right? And it does take us a few weeks to get up there, right? Or a few days to get up there, but we can see that's how bullish price action getting up there. Okay, any questions about that? And then I'll do a real quick into the 15-minute time frame and to see what we want to look for here. Cool. So coming into the 15-minute time frame, the absolute first thing you want to look for is on the electronic trading hours. What is your new day opening gap? Or new week opening gap? Did we come into the new week opening gap on the Asia and London? If your answer is no, then look for New York to come and fill this. This is your highest form of drawn liquidity. So look for price to come and fill this. This is going to be filled nine out of 10 times instantly. If price has not filled or returned to at least a consequent encroachment of it, midpoint of it by New York Open, we can expect that to be filled. Now, after that, we can kind of just look for liquidity points here and kind of see what areas are smooth here, right? After taking out this low right here, right? We can see price start to run up. We have a shift in market structure right here, right? In Asia here. So what can we expect coming into here on Tuesday morning? Right, shift in market structure here. Inversed all of this stuff here. We have this BISI to work with, SIBI to work with, so it's going to be a little bit of high resistance liquidity run. Come Tuesday, market open here. Looks like we ended up taking out this high here, but come market open here. I guess this is a really bad example because that's kind of Thursday and Friday. See if I can find a better example here. Okay, let's use this example. We have Asia highs that are left intact here, right? We can look at our daily profiles again. Right, we have Asia highs that are intact as our accumulation. We have London keeping Asia highs moving lower, coming into a discounted 1 hour BISI here, right? So what can we reasonably expect since we left Asia highs? We have these clean London highs, right? And we should be bullish because we came into a daily BISI into discount, right? And we're expecting higher prices. Yes, it's moving higher. Everything is moving higher here. We can expect higher prices here. So what does 930 come and do here for us? 930 comes into this 15-minute BISI, right? And starts to send us higher here. Boom. So our daily bias was immediately bullish, right? We should be bullish because we're in this area here, right? What else? What other confluences do we have in this area? Well, you have your breaker block here, right? You have your breaker block. Their bullish order flow is happening. So we end up seeing that run up. Now let's come to Wednesday here. Wednesday, again, we took out the only drawn liquidity that's here. What did we do here in Asia and London here? We left Asia high intact. London came down, manipulated us downwards. We ended up sweeping these 2 points of liquidity here and here, right? What did we do, right? What's a reasonable thing to expect, right? Asia high, London high intact. We're bullish on the day, right? Let's look for something where it's not as obvious here. So let's say we have Wednesday here. Really want to use this example. Is this a good example? Yes, it's a fine example. We have Wednesday here, right? We have Asia session here, right? Asia highs taken here, here one more time again, but that's fine here, right? And then we have this London consolidation here, right? Here's where you're like, okay, well, this is not really a good idea here. And you don't kind of know what's going on here, right? We have these relative equal highs here, right? Would it be a terrible thing to expect price to come up here? No, not at all. What did we end up seeing happening here? We saw a big day dump down. Now, why did we see a big day dump down? Well, there's a couple things we can expect from here. We can expect that it was from this really big range day on Tuesday, or we can look into something higher time frame. Maybe let's come into like a 4 hour here and look around that same exact time here, right? We came into the SIBI, inversed it. I mean, this honestly, I'm not gonna lie. Looking at this is not much telling you that we should have been bearish today. So, I mean, yeah, honestly, I probably would have been bullish today on that day. I probably would have been bullish. And there's nothing wrong with being bullish and price does not go in your favor. Price ended up completely dumping down here, which is fine, right? We can expect if price is going to dump down, we can expect it's going to come down into equilibrium or at least optimum trade entry here, right? Which it does. And then we can kind of expect a run up here. So after 930 kind of comes down, right? No clue what the fuck he even decided to do this for. I'm gonna keep it a buck with you guys. No clue why I decided to do this. I guess you have this inversion here, right? Price came down here. Clean highs here. We can expect this to eventually get taken. Doesn't have to get taken today, right? Let's expect our weekly profile of Tuesday low of week here. We should have expected Wednesday to continue our run higher. That didn't happen. I ended up just consolidating up into Thursday. See if Thursday gives us anything here. Okay, now I can kind of frame exactly what happened here. Thursday, we come up, we take out both of these highs before market opens here, right? So what can we reasonably expect since we took out basically most of these highs here? We can expect a decent retrace down, right? What's really clean? These relative equal lows that we've made here. These are super clean, equal lows here on NQ, right? Relative equal lows down here. These are the cleanest form of liquidity. So come into the 15-minute chart here, basically, long story short, and look for your clean areas of drawn liquidity, your smooth areas. Like we're not leaving equal lows here on NQ and relative equal lows right there. It's not happening, right? And then, yeah, I guess that's what I'll say. Just look for your smooth areas here, right? What's another area that's smooth here, right? On Thursday, we're at these highs that were super smooth, especially we had this new day opening gap, which we could have easily expected to be filled here, right? In the AM session, since that never happened. Boom, came and filled that. So now we can look at the next day, which is Tuesday here, right? What makes the most sense to go? We're bullish, right? We ended up filling that new week opening gap here. Tuesday was fucking consolidation fuckery. Okay. And then we had some nice lows down here, relatively equal here. So we came down and taken these. So basically, use in conjunction your daily chart. Are we in bullish order flow? Then you can expect decent bullish action, right? Did we make any PD arrays here? Yeah, we made a propulsion block here. Okay, so we can reasonably expect price to probably come down into a propulsion block eventually, right? What happened here on Wednesday, right? We came down into that propulsion block right here. And we started out sent higher, especially after taking out these lows and leaving these relative lows here on Tuesday. Okay,